This is Trade Commentary for the 7th of January, 2019. The fact that I'm short 2 call options in crude oil will have my interest this week. Back in the first week of October, if you remember, with crude trading about $79 a barrel, many of the so-called experts were predicting $100 a barrel oil. Now its price has fallen 40%. The April 19 futures about $49 a barrel. The same experts are strongly suggesting that WTI crude might get back up to $65 in the year 2019. My short April 2019 crude oil 70 strike expires in 68 days at the middle of March. The short June 2019 $70 call expires in 129 days out in the middle of May. If the markets buy into this rosy sentiment they picked up Friday, it could be time to consider adding short puts to my short calls to form short strangles. I will be exploring that possibility this week. With Fed Chairman Jerome Powell sparked that huge rally on Friday by telling the market exactly what it wanted to hear, that the Fed will be flexible on policy and it's in no hurry to raise interest rates again. There is no doubt we are in a season of headline-driven markets with everything going on. The Fed speaks, China trade talks continue this week, the U.S. government shutdown continues, there's no WASDE report this week, more on that in a moment, and of course the world media continues to throw shadow on the Chinese economy. The budget shutdown in the United States canceled this week's Friday, January 11th WASDE report from the USDA. I'm still short the 360 puts on May corn at 3 3/8 cents. I think they closed Friday at 2.5 cents, and the futures closed around 3.90 cents on Friday. This chart compares the April gold prices with the May 2019 silver futures, and you can see the correlation between the two is absolutely uncanny. No surprise, really. And you may recall I've been trying to find some silver options to sell lately. Well, the sentiment right now is that gold has had a good run up, and if the stock market does improve and the dollar gets a little stronger, it will bring gold prices back down a little bit again. And since silver no doubt correlates with that, my plans to sell some silver options are again on hold. I find myself having to remind myself that our job as commodity option sellers is not to guess where prices will go, but only to sell strikes at levels where prices are not likely to travel. By the way, there are a good many subscribers on the free trial that might expire soon, so I'd like to take the opportunity to invite them to continue with the newsletter. You'll find links on the website. There's a summary of my current positions and the text for this trade summary today. Please remember this type of trading can be risky and that I post my trades for educational purposes. I cannot and do not say which trades may or may not be appropriate for you personally. By the way, I posted a recent crude oil option trade on the sellingcommodityoptions.com blog if you'd like to take a look at that. That's all for today. I hope you have a great week. This is Don Singletary, and thank you.